Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 15th of December. Starting off with Anglo African, where it could be third time lucky in terms of the breakthrough the 7 to 8 pence zone and out of this triangle that's been in place since the summer of last year. If we can sustain 8 pence, hopefully on an end of day or a weekly close basis, the top of the channel from the end of 2018 could be seen up towards the 16 pence level over the next 1 to 2 months, or hopefully sooner. This stage only really back below the uptrend line there from the beginning of the year, around 6 pence, really delaying the upside scenario. On to Alpha Growth, which I know has its many fans, and they've been rather patient over recent months and maybe years. Current situation is that we look like we're nestled in a nice bull flag here above that resistance line, which was broken in January. The floor of the particular formation around 2.25 pence. So while we're above that, on an end of day close basis, it should be the case that we head up towards the top of that rising trend channel from April up towards 4.5 pence, or maybe a bit more, hopefully by the end of next month. But it just looks like this is well nestled there at the former resistance zone, and hopefully on this occasion, rather than delivering the kind of retracement that we had in the turn of the year and since then, we'll actually move on from the 2.5 pence zone. Stonking update from Contango today, and rather disappointingly, after the initial surge for the shares through 10 pence, they're back at 8 pence. Looks like we'll find support from 7 pence upwards, hopefully. So above that, looking for the that June resistance line projection up to 12 pence over the next 4 to 8 weeks for Contango. But hopefully 7 pence will hold there. Stock that I've been looking at for a number of days and waiting for the right moment to pounce is Corcell, and maybe you can guess why I've chosen today. We had a little bear trap there back below that old 0.89 pence low that we had in August, and hopefully today we'll get an end of day close back above that. We actually had an end of day close above it yesterday, so hopefully there'll be some follow through and take the shares at least back up to towards the 1.1 to 1.2 resistance on the way down. Obviously the big prize here is for a retest of September resistance at 1.6 pence, but the confirmation of that would really come through with a break of that resistance line from the early part of September around the 1 pence area. But while we're above 0.89, the longer we stay above that, the greater the chance of follow through on the bear trap. Stock which is relatively quiet these days, but hopefully will start to get a bit more exciting, is Evgen Pharma. Sort of missed the excitement of the other farmers this year, but we've broken out of this triangle from the beginning of November around the 9 pence level, and an end of day close above that hopefully will start the journey for the shares with a much higher low for December, start the journey for the shares up towards 2020 resistance and the top of the channel from August at 16 pence plus, hopefully by the end of January. No such issues with European metals, because we just seem to be surging through. We had the starting gun here really was that gap through the 50-day moving average and the other averages there, 20 and 30-day moving averages at the beginning of last month, and after a bit of jiggery pokery, we've pushed through. The current situation is that while we're above the November intraday high at 46 pence, we should head up towards the top of the rising trend channel from July's high as 80 pence, and hopefully that could be seen as soon as the end of next month, but the way things are going might even be the end of this month, and possibly much more to come on this particular stock as well. That resistance line could actually be drawn like that. So there's a little bit more there than 80 pence hopefully coming up on European metals. Haydale is next, and it's obviously been quite a rocky ride for the shares over the recent past. We had a wonderful peak there in August, and it's taken a while for the dust to settle. Bounced off the 200-day line, so maintained and affirmed the bull trend overall, and end of day close really through the 4.5 pence area today should be enough to get the shares up to the top of that triangle, that channel rather, from the middle of September. It's up to 7 pence by the end of next month. Obviously a retest of August resistance is what the bulls will be looking for early next year. Newer stock to the market, and one which I've covered a couple of times and seems to have behaved itself very well. Previously on the hourly chart, and I think we were sort of looking for 135, 140 on the previous occasion, which we got. Current situation is it looks as though the shares are in a rising trend channel on the daily chart, having broken that line of resistance as well from the initial part of the month of £1.25. It looks as though we can say that above 125 on an end of day close basis, we're looking up towards as high as £1.60 at the top of the November trend channel. So that would be quite a reward for holders there after seeing we were just down at £1 at the latter part of November. So hopefully see that work out. On to Mustang, without Sally on this occasion. One can see that we've got the breakout through the 12 pence level that we had, that we identified last time I looked at the chart. And while we're above 12, and it looks like we'll remain above 12, we should head significantly higher. At this stage, the top of the broadening triangle from the summer of last year, rather a sort of vague triangle, but or imaginatively drawn triangle, heading towards 22 pence, hopefully over the next 4 to 6 weeks, while we remain above the 12 pence level. A stock which has been requested today, which is relatively quiet so far, but seems to have a lot of fundamental aspects going for it, if you believe FinTwit. Here we've had multiple bounces and sort of much trading either side of the 200-day moving average, currently 0.36 pence. But the real trigger here, I suppose, on the upside would be an end-of-day close or a weekly close above the 50-day moving average in that November resistance line at 0.41. If we can get through that, then the target here would be up to 0.6 pence. And the upside valid while we hold above 0.35, which obviously looks like a relatively strong support area for Oriole Resources. Just a couple to go now. First one is Orphan, which is celebrating being mentioned in the Times today with its nasal spray. And here we've got a situation where the shares have been in consolidation since the middle of October. That consolidation tightening up now, so hopefully there'll be a breakout to the upside. Looks like a continuation formation with all the well, at least the 200-day moving average rising and the 50-day line also rising. So end of day close through the 24 pence level anytime this week or next week should be enough to get the shares on the next leg up early in the new year, which would be towards the top of the rising trend channel from September, currently promising a target as high as 35 pence, maybe sometime in January or February. Finishing off with Zanaga, we're obviously iron ore prices surging at the moment, and it looks like finally it'll be second or third time lucky for the shares breaking the 7 pence level. End of day or a weekly close above 7 pence should be enough for Zanaga to head up towards the top of the rising trend channel from June, currently promising as high as 11 pence, hopefully by the end of next month. The upside valid while we hold above the 50-day line at 5 3/4 pence. That's it for me today. More updates tomorrow.